In the middle of the worst economic crisis in decades, the government has now announced that they will be ending the bank levy that was brought in after the bailout, which is a move that is seen as many as essentially letting the banks off the hook for being saved by the taxpayers. At the same time, the VAT rate, which was lowered during the pandemic, is set to increase once again so that all of us ordinary consumers can foot the bill. This is Ben Scallan and you're watching Gript Media. So yes, indeed, the banking levy is set to end this year, according to Fine Gael Finance Minister Paschal Donohoe. The levy was originally introduced in 2014 so that the banking sector could reimburse the state for bailing them out. As we all know, during the last recession, several banks, including AIB, Bank of Ireland, EBS, Irish Life, and several others, received €64 billion from the taxpayers to stop these institutions from going under. Naturally, there was a system put in place shortly after so that they could pay some of that back gradually over time. So far, this levy has been raising around €150 million per year for the state. So with all that in mind, let's do some quick maths. 2014, when the levy was introduced, was about 7 years ago now. So 7 years at €150 million per year equals $1,050 million. That's how much the banks have paid back. Around 1.5% of what the bailout cost us. Now compare that to the €64 billion we, the taxpayers like me and you, spent on the whole thing, and that's not even including interest on that debt, which is substantial. You're talking about a tiny fraction of the money that we paid that's actually been returned to us. And now, during a total economic disaster, this levy will be scrapped and the banks will be allowed to keep that €150 million in profits every year. Also bear in mind, it's not like the levy couldn't be extended if the government really wanted to. It was originally only supposed to run from 2014 to 2016 until Michael Noonan, as finance minister, extended it to 2021. So they've extended it before and very easily could do it again. But instead, what will be happening? Well, the VAT rate will be increasing once again for consumers at the end of the month. As many people will be aware, the original VAT rate in Ireland was around 21%, and that was increased to 23% in 2012 in the wake of the 2008 financial crisis in an effort to help the state pay for the damages. This decision drove up the cost of alcohol, fuel, cigarettes, vehicles, clothing, jewelry, sports goods, bicycles, computers, furniture, sweets, you name it. For the past 8 or 9 years, Irish consumers have been paying more for all of these goods and services because of the VAT increase. And 2% extra might not sound like a lot, but when you consider how many purchases you make in a year, it definitely accumulates. According to the Nevin Economic Research Institute, the change cost the average household an extra few €100 a year. While last year the government temporarily reduced the VAT to 21% to stimulate the economy during the COVID lockdown, Paschal has indicated that this brief bit of respite will be expiring at the end of the month, and he and his government have no plans to reverse it. So in the same year that the banks, who were saved by the taxpayers, are having levies taken off them and the economy lies in shreds due to the government-imposed lockdown, the Irish taxpayer and consumer will be picking up the tab for these blunders once again. This is after, in 2019, the Dáil voted against increasing the bank levy by 93 votes to 35. At the time, they argued, well, you see, if we levy the banks anymore, then they might challenge it in the courts. Which may well be true and appears reasonable on its face. But yet here we are just 2 years later and the levy is being done away with altogether. So even if the banks had objected to it, it hardly would have mattered, considering they won't be paying us a cent anymore going forward anyway. It's decisions like this that have Ireland the third most indebted country in the developed world per capita. Our national debt is currently a record €239 billion, partially due to the COVID lockdown, but also just generally because of fiscal illiteracy among our leaders for years prior. To put that €239 billion figure in perspective, in 2019, before the COVID lockdown decimated the economy, there were 2.3 million people employed in Ireland. Assuming all those people get their jobs back when this is all said and done, which is a big assumption, each Irish worker will find at least €103,913 of debt hanging over their head when the dust finally settles. Now, will scrapping the levy be all bad? Well, not necessarily. It may have some positive side effects, like banks offering cheaper rates to customers as they're able to cut costs now. Usually when the government taxes a business like a bank or any sector really, the cost just ends up cascading down to the customer in one form or another. So sure, there could be some swings and roundabouts here, but ultimately, at the end of the day, the principle of this back-scratching relationship between government and big business, like the financial services sector, has been a feature of Ireland for far too long, and is one of the many reasons why life for small business owners in this country is becoming increasingly difficult. Every year, the World Bank issues a report showing the world nations in which it is easiest to do business. And over the past 12 or so years, Ireland's rating has dropped precipitously long before COVID came on the scene. By the way, for contrast, New Zealand once again ranked #1 in the world for the 4th consecutive year in a row. Small island nation, not in the EU, #1 easiest country to do business in the world, while our numbers drop year after year. It's just something to think about. All in all, it's just another case of the government doing what they do best: crony corporatism. They'll defend big multinationals like big tech social media companies even as they censor Irish citizens. They'll indemnify big pharma companies against legal liability for potential side effects from their vaccines. And they'll defend the banks who caused the financial crisis in 2008 to begin with, while putting the VAT rate up so you can foot the bill. The incestuous relationship between big business and the political establishment in this country is plain for all to see, and it needs to stop. Please like and share this video, and if you enjoyed it, please consider signing up for a monthly donation via the link on screen to help us produce more content like this. Alternative media like Gript needs all the assistance it can get, and every donation goes a long way. As always, thanks for watching.